Currency traders bet against sterling, but can Rachel Reeves pull off a budget that boosts growth? Traders are piling into bets that the pound falls further against the dollar in the wake of Wednesday's budget, amid fears higher taxes will slow the UK economy. Finance Minister Rachel Reeves faces an extremely tricky balancing act in her second budget. She's under pressure from bond markets to create more fiscal headroom, while worries are also growing around weak growth. Sterling puts, bets that the currency falls, outweigh calls by 4-1 ahead of Wednesday's speech, according to data from CME Group. Toby Gibb is head of investments at Artemis. Toby, that sounds a bit like investors are losing faith rather, but can Reeves use this budget to encourage growth?
I think it's going to be really difficult for her. We've had, as we all know, weeks, months of speculation and sort of various policy ideas being floated in public, and a lot of U-turns, a lot of uncertainty. And I think, given the tight fiscal situation, given the relatively low growth in the UK, the sort of the poor productivity picture, I think it's going to be really difficult for her to deliver a budget that sort of appeases everyone and delivers growth. I think it's more about doing the best with a relatively or a pretty difficult position.
We know that the bond markets have been nervous. What do investors want to hear from the budget?
I think, from the bond markets, I think some more fiscal clarity. I think what we've seen when we've seen the big sort of sell-off in bond markets, it's when we had the removal of the welfare cuts, or also the U-turn on income tax. So I think what the bond markets want to see is some stability there, that, as I said, I think is going to be a tricky thing to deliver. But I think, that's really where the concerns are going to be.
You said that corporates need stability. British business was very critical of her last budget, especially the rise in employer national insurance. Could there be more positive elements in this package?
I think the reaction to the last budget, and particularly the inflationary impact of national insurance increases, will make the Chancellor very, very wary about doing anything similar. So I think that's key. I think she's learnt her lesson there. But I think, as we're not going to have, in all likelihood, an increase in income tax, I think there will be increases in taxes in some areas, but they will be sector by sector. The problem with that is, when you do have a sort of smorgasbord of taxes like that, it's quite difficult to know what the knock-on sort of unintended consequences will be. And that I think is what the markets are going to be worried about tomorrow, is just unraveling those and trying to work out what the knock-on impacts would be, whether it's a gambling tax or taxes on property or whatever, what the knock-on implications of those will be.
As you mentioned, Rachel Reeves prepared the ground for a rise in income tax across the board, which we're now not expecting to happen. Was that U-turn a significant loss of credibility?
Yes, I think it was. I mean, the bond markets were clearly positive towards that, given the impact that would have had on the fiscal situation. And since we saw the U-turn, we did see a sell-off in gilts. So I think that does impact credibility. And I think generally what we say is markets are much better at digesting certainty than they are about digesting uncertainty. The budget tomorrow will hopefully provide some certainty. At least we won't have any more speculation about what's going to be in the budget. But potentially what it will create, if it isn't received well, is uncertainty about the leadership. If the budget isn't received well, will Rachel Reeves survive? Will even Keir Starmer survive? I think that's the thing that markets will be worried about going forward, should the budget not be received well tomorrow.
And how much of a premium do markets put on that stability as opposed to specific policies?
Well, quite significant, I would say. If you think about growth in the UK, if you think about interest rates in the UK, if you think about the equity risk premium in the UK, i.e., valuations for UK stocks are at a significant discount to Europe and well, absolutely to the US, and I think part of that is due to the less stable political picture, as well, obviously, to the relatively weaker growth in the UK versus other economies.
That was Toby Gibb of Artemis Investment Management. Don't forget, you can watch more videos on Reuters.com.